Hi, everyone. Thanks for tuning in to Passport to Wealth, the podcast that takes you on a journey through navigating your finances as a U.S. expat. I'm your host, Arielle Tucker, a certified financial planner and enrolled agent focusing on cross-border planning for U.S. expats. And I'm joined by my co-host.
I'm Savannah Chafin, a CFP candidate, enrolled agent, and self-declared expat tax nerd, here to guide you through the maze of life and finances across borders and share the inspiring stories of fellow U.S. expats who have navigated the process.
Welcome back to Passport to Wealth. I'm your host, Arielle Tucker, certified financial planner, enrolled agent, and co-host of Passport to Wealth, and also founder of Connected Financial Planning. Today on Passport to Wealth, we're excited to welcome Chad Hatalla, a U.S. tax expert specializing in cross-border taxation and financial planning for inpats and expats. Chad has extensive experience helping non-U.S. and U.S. citizens abroad navigate complex tax and Social Security issues, ensuring they remain compliant while optimizing their financial strategies. And today, in today's episode, we'll be diving into a topic that directly impacts many expats, including me and you, Chad, U.S. Social Security payments. So Chad recently wrote about a law President Biden signed into law at the beginning of the year, which may increase Social Security benefit payments for certain beneficiaries. And we're going to unpack what this means for Americans who are living abroad. We'll discuss who benefits from these increases, how Social Security payments work across borders, and what expats need to consider when planning for retirement outside of the U.S. Chad, welcome to the show. We're looking forward to learning from your insights today. Great. And this is all coming about because I was on LinkedIn and I saw that you posted this article about the repeal of the windfall elimination provision. And I was just really excited because this happened in early January, toward the end of President Biden's term. And I felt like there was just so much other news that was swirling in that the New Year's cycle and with Trump coming into office, that it was like, would have been huge news on any other day, but was just kind of like missed in everything else that was going on. So why don't you tell us what is the windfall elimination provision and for Social Security? Can you explain that a little bit for us?
Sure. This is something that I've been following for some time because it impacts a lot of my clients and potentially me, or it would have impacted us when we retired as well. So the windfall elimination provision and another thing called the government pension offset were two laws enacted. You'll have to fact check me on this. I think back in the 80s that basically reduced Social Security benefits for different groups of people depending on what they were contributing to. So for example, certain like teachers, firefighters, police in certain states, and other government employees who were paying into the civil service retirement regime, they were, to the extent that they were collecting from those systems, their otherwise amount of Social Security that they would qualify for was reduced by a portion of what they were getting from the other system. And since its inception, the system was a little bit inherently unfair because if you're not paying into Social Security, you get nothing from it. So if you contribute, say, 10 years and then get a government job for 10 years, you don't get anything from those 10 years you weren't contributing. And Social Security, the way it works is they look at the last 35 years of your contributions. They do some calculations to get up to the fair market value today and then determine what you're entitled to. So if you didn't contribute, you're already getting a lower amount. And now if you're getting something else, they're reducing it even further. So I believe there were 4 other attempts prior to this where it was bipartisan each time. They proposed a bill to eliminate it. Each time it just kind of fell by the wayside. So I was a little surprised that it made it through this time. Biden signed it into law on January 5th. This will be retroactive to January 1st, 2024. So people who are already collecting Social Security benefits and had one of these two provisions that were reducing what they were getting will be caught up some date in the future to be determined. So the Social Security Administration is still kind of working through how they're going to implement all this.
Yeah, and I always find it really funny when we're working with, Americans abroad or even not Americans, but individuals who worked in the US for a few years. And so they've got Social Security benefits in the US and maybe Social Security benefits in Switzerland and in other countries. And they're kind of like piecing this all together. We would basically say, okay, gather all your statements, and the statement that you see from Switzerland or from Germany or all these other countries that you've worked in, we can basically trust that number. But with the Social Security statement in the US, we would then have to go and do like kind of complex calculation, a manual calculation, where we would have to go through, okay, how much, what was your work history? What were years? What were the contribution of those years? What are you getting from all the other sources of Social Security in other countries? And then kind of put them all together and then be like, okay, this is our best guesstimate for what you're going to get on the US side. So it was always kind of complex and a bit of a black box for US expats or those with the US work history. So I'm glad that we have that transparency kind of now. You look at your Social Security statement, that's what you're going to get.
Exactly. It should simplify, excuse me, it should simplify things going forward for people. The big question up in the air now is, when will they get this figured out, and, what will people have to do in order to get these back payments? And I just checked the Social Security Administration's website today. It's still on an ongoing process they're working through, so people should keep watch on their Social Security Administration on their website just to see if there are any updates in the next month or two.
Yeah. So I guess let's go back a step. How do the totalization agreements between the US and certain countries affect expats' eligibility for Social Security?
Sure. So the U.S. has totalization agreements with, I believe, about 30 countries. Most of them are in Europe. There's a couple in South America and a couple in Asia. First of all, let's start with what the totalization agreements are there for. So the totalization agreements are there to provide clarity for international movements. Where are people supposed to be paying their Social Security? For employees, if you're, say, a person moving from the United States to, say, Switzerland, let's use Switzerland because that's where I'm based, and you're remaining on U.S. payroll, you can continue to pay into the U.S. system and not have to pay into the Swiss system, which is great for international assignees who are only going for a year, 2 or 3 years. But the company then needs to apply for something what's called a certificate of coverage to prove that they're paying into the U.S. system and therefore exempt from the Swiss system. If you're an employee who's just going on a local move, so you're leaving the U.S. payroll, you're going on to Swiss payroll, then you pay into the Swiss system. So these totalization agreements provide for clarity as to where you should pay, and if there's an option, there's usually an option to remain on your home payroll as long as you're only in that other country for, say, no more than 5 years generally. It also provides clarity to self-employed people. Generally, most of the agreements will say if you are self-employed in the U.S. prior to your move, and then you move and continue the same self-employment in that foreign country where there's a totalization agreement, then you will continue paying into the U.S. system for at least 5 years. In that case, you should get a certificate of coverage so that you're not subject to the self-employment taxes of the other jurisdiction. Where this hurts people is where there are countries where we don't have a totalization agreement. And so there are some people that will have to pay into both systems because there is no agreement in place to exempt them otherwise.
Yeah, we see that question occasionally from other countries. Like you said, I think there's about 30 countries with totalization agreements, mostly in Europe. But if you're working in a country in, I don't know, South America or in Asia that doesn't have a totalization agreement, that country may have its own Social Security program that you have to pay into, but then also you still have your U.S. tax filing obligation. So you still need to calculate how much you would potentially owe on the U.S. side as well. That's a great point.
Exactly. That catches some international assignees or international transferees by surprise.
Yeah, and I mean, it's so interesting how Social Security systems work differently in each country, right? I talk about this a lot where the Social Security benefit in Switzerland is so low. It's so low, right? You work for like what, 40 years in Switzerland. Max benefit is I think around 29,400 Swiss francs. Switzerland's one of the most expensive countries in the world. I can tell you, you cannot survive in Switzerland on 29,400 Swiss francs. And then there's also like a bit of a marriage penalty, right, in Switzerland. And you compare that to benefits in the US, and I think it's indexed for inflation. I think a couple of years ago we had an 8% inflation adjustment for Social Security payments. That's amazing. That's huge, right? I wish I could get guaranteed 8% on, my returns in retirement. That is kind of amazing to think about. And max benefits are what, like $60,000 a year, so significantly higher than what you would get in a lot of other countries.
Yeah, I think part of that, I mean, just talking about Switzerland in general, Switzerland still has a pension system. So as you're working throughout your life, both you and your employer are contributing to a pension, which then when you retire, you can either annuitize it and you have pension for life, or you can distribute the capital amount and do with it as you please. So the pensions are a much bigger portion of retirement in Switzerland than say in the US, where pretty much a lot of pensions kind of disappeared during the 80s, and now everyone's kind of fending for themselves by contributing to 401ks. So I think that you're right that the max benefit here for Social Security is much lower, but luckily it makes up for it because of the pension system. But you got to watch that depending on where you move in the world, because there may not be an offsetting benefit in terms of pensions.
Yeah, I think that's a great point. And I do find with expats who are trying to build, right, we basically think about a three-pillar system for retirement. Most countries have that set up, including the US, right? We have Social Security, kind of your minimum benefits that you're going to receive. I think about expats living in Germany, for example. If you're self-employed, you may not be obligated to pay into German Social Security. So we talked about that a little bit earlier this week. And so if you're not obligated, are you paying back into the US system? Where are you paying? Are you just not going to have Social Security in retirement? That's a big pillar for a lot of individuals. Second pillar is, right, like you said, employer/employee savings. We're both committed to that pillar. In the US, we've got the 401k plan, which is great. If your company has a 401k program, 403b, those types of plans are fabulous for employee and employer contributions. But in the US, we don't have the same guaranteed contribution levels.
Yeah, there's no defined benefit plans are the main plans that have kind of disappeared from the US. There are some exceptions. There are some companies that still offer it, but for the most part, those have gone away. And that's what Switzerland, Germany, and some other countries still offer. So,
Yep. And then the third pillar is obviously that personal savings pillar. And that's where we're talking about traditional IRAs, Roth IRAs. And if you're in Switzerland, pillar threes, which we don't recommend for US citizens, side note, those types of other supplementary plans. And you really have to look country by country. If you are living in another country, your country likely has a plan to tax incentivize you to save for your own retirement. But the US is really tricky, and then a lot of times the US won't recognize that plan. And so it's really important to work with your local preparer to confirm how will the US treat this particular savings that I'm making in this third pillar. Things to double check. We talked about this a little bit, the special considerations for self-employed expats when it comes to Social Security and taxation. It's possible for self-employed expats to continue their certificate of coverage from the US standpoint for up to 5 years. It's possible that they may not have required contributions in their country. Are there anything else that self-employed expats need to be thinking about when it comes to US Social Security?
well, I mean, one, if they're not covered by a foreign system and there's no totalization agreement in place, yeah, they should be paying into the US system. The IRS, sorry, I'm going to get the organization wrong. Is it the I'm not going to use the acronym because I'll probably get it wrong. There's a report done every year that looks at where are the biggest tax gaps or errors, and one of the biggest ones is people inappropriately or incorrectly applying totalization agreements and not paying the self-employment taxes that they should. So there's always a question, is the IRS going to start looking into this more? your guess is as good as mine. We have a new president, so it's not clear, what the priorities are at this stage. But yeah, people should make sure that they understand both sides and that they're contributing to the one where they're required to contribute, so that they're not getting into trouble. I'm not an immigration lawyer, but on the foreign side, it could even jeopardize, their status in the other country if they're not paying into the proper system. So.
That's a great point. I think that's really important for U.S. expats navigating. I mean, there's so many. There's not just the tax, but the tax and immigration considerations, long-term plans. Where are we trying to build our life and our wealth? Um, for expats who are nearing retirement, what are the steps that they should be taking now to ensure that they maximize their Social Security benefits? Is there anything that they should be doing?
Well, there's nothing you can really do to maximize. What you want to do is, if your listeners haven't already, is to log into to the Social Security Administration website to see their account. Some people once in a while will get the statement during the year that will show here are your contributions by year. Make sure that that's accurate. If you log into your account, you can pull that statement. It will also give you an estimate of what your projected Social Security benefits are at full retirement age. So just make sure that that's accurate, that they haven't missed anything. But there's really nothing you can do to, I guess, increase the amount that you would otherwise get. Um, I mean, you can delay retirement, which would, up to age 70, that would increase the amount that you'll get, or you could take it early as age 62, but that would decrease the amount you would get. But that's kind of I guess, separate from this discussion. That's more in terms of retirement planning, what makes sense for the individual themselves.
And where can expats go for help to kind of determine their eligibility and optimize their benefits and really make sure they're staying compliant with U.S. Social Security rules?
Well, yeah. So one is their tax professional, especially if they're self-employed. I mean, as employees, hopefully their companies have made the proper arrangements. So my background is, the Big Four. I used to help companies move people between different countries, and one of the basic planning things that we did with the companies was make sure that they were paying into the proper Social Security system. Um, so larger companies tend to have this taken care of. Sometimes some of the smaller mid-sized companies don't haven't addressed this. They don't realize it might be an issue. So if someone's contemplating a move overseas, they should ask their company before they go that whether this has been taken care of and what's required and what will happen. Um, Otherwise, yeah, self-employed people definitely check with your preparer. Make sure that they're familiar with international requirements, because there's a lot of great domestic, U.S.-based CPAs, enrolled agents that do great tax work. But as soon as something international gets thrown in there, their confidence might erode a little bit. So make sure that you have somebody that can provide proper guidance for your fact pattern.
Yeah, those are all great tips. And I was just thinking about, I do believe that everyone should be able to access their Social Security, documentation and also their IRS tax documentation. And so we wrote an article all about how to set up an ID.me account, which you can do using a foreign phone number. It is a pain. Like I've done it. Maybe you've done it. It is a bit of a pain. But you want to make sure that you're checking in on these statements. I would say like once a year, like kind of like in the same way you would run a credit report to make sure your credit hasn't been stolen or check in once a year just to make sure you log in. Okay, does this information look correct? And if it doesn't, you can, don't wait 20 years before you're ready to take Social Security to log in for the first time. So we will link that article. It's on the Connected Financial Planning blog, but it's just how to set up an ID.me account. Chad, it has been so much fun having you on the show and hearing more about the repeal of the windfall elimination provision. I really appreciate you sharing your expertise with us. What is the best way for our audience to just get in touch with you directly? And we'll be sure to link that in the show notes.
Yeah, so I guess via my email address, or yeah, I guess probably better to link that than to spell it all out. But
Okay. We'll put your. I wasn't sure if you had a website yet. That's what I.
It's being developed as we speak. So probably in 6 weeks' time it'll be up. But yeah, I
Do you
don't
want
have
to
a.
do you want to say what the web address will be, because it'll probably be live by the time this is posted.
Yeah, it'll be europa-ustax.ch.
Okay, so we'll be sure to link that as well, and your email address. Again, thank you so much for joining us today, and we look forward to having you again on the show soon.
Thank you for having me.
Thank you for tuning in. Stay tuned for our upcoming episodes packed with insights and stories to empower your global financial journey. This is Passport to Wealth, where your financial future knows no borders.
The information provided in this podcast is for informational and entertainment purposes only. It should not be considered professional, financial, or tax advice.
We strongly recommend consulting with a qualified financial advisor, tax professional, or other appropriate expert before making any financial decisions or taking action based on the content discussed in this episode.
Your personal financial situation is unique, and a professional can provide tailored advice to meet your specific needs.